Hey there, and thanks so much for tuning in again to Weekly by Walker, where we will highlight notable consumer credit trends week over week across our portfolio, originations, as well as possible accommodations. This week is much like last week, where things remained relatively stable. But first, we're going to dive in and take a look at portfolio. So overall, from a portfolio perspective and total debt perspective, for accounts, balances, as well as delinquencies, we saw a decrease week over week, and that helps to keep our delinquency rate at 0.7%, and we've seen that now for about 4 weeks in a row. One product to call out this week is our first mortgage product, where here it was the only product where we saw an increase in balance week over week. Still noting, we're going to call out auto, as we saw a continual slide this week with delinquencies landing now, as you can see, at 0.8%, 0.87% actually, while accounts and balances remain relatively stable week over week. Bankcard, from a delinquency and a utilization perspective, you'll see here just a little over 4% decline there in the delinquency rate for Bankcard, and that utilization percent we've seen now at 7 weeks in a row, holding at 19.2%. Private label card does follow, as we said last week, that of Bankcard, and there's no change to that this week either. We can see here a little over 3% decline, landing at just under 4% at 3.88 from a delinquency rate perspective, and a hold at 13.4% for the utilization metrics. Here for first mortgage, we've got our balance and delinquencies up on the screen, and you'll see here where we had that very slight increase this week, 0.1% in balances, and a slight decline in delinquency rate, landing down at 0.52%. But week over week, it was about 11% decline. Next, we're going to jump into originations, where pretty much the story does remain the same. Auto, private label, home equity, our revolving accounts, as well as consumer finance, all experienced growth in those late April and May vintages, particularly compared to those of March and April. And we are continuing to see these trends. From a subprime perspective, we're seeing a decrease in share for our bank card, our private label card, first mortgage, and consumer finance period over period. As a reminder from last week, we're now showing both Vantage and FICO scores in our originations reports, and you'll see 2 of each of these screens as we move through these next segments. First, from an auto perspective, you can see here that our subprime share slightly increased week over week, but really seeing and noticing the balances, particularly those that are a little darker pink, headed over to the red. You'll see that those have been growing rather nicely. Same here for the FICO view. When looking at HELOC, you're sort of seeing the same thing, paying particular close attention here to those balances where they have been rising in the darker pinks, and seeing the subprime share increases here week over week. And last, in our consumer finance segment, sort of the same thing, higher balances in most recent vintages compared to those in April. And if we had March on the screen, we'd sort of be seeing those same trends there as well. As we head, into July, we are expecting these lighter shades of pink really to grow up and to get close to the darker pinks. Last, we're going to talk about our possible accommodations. And just a reminder that a loan accommodation really is any form of relief that lenders may offer over to borrowers during a time of hardship. We have been sharing the percent of accounts. This week, we're sharing percent of accounts as well as percent of balances. First, we're going to take a look at percent of accounts. Overall, relatively stable. We were at 3.6% last week. We're at 3.6% this week of all loan types, excluding student lending. That's under some form of a possible accommodation. We saw one slight decline, and that's in mortgage, and that was at 0.2%, but that still keeps that percentage at 8.5%. week over week. Looking at this from a percent of a balance perspective, this too has remained stable. Last week was at 9.1. This week we fell 0.1% to 9% flat of all accounts from a balance perspective that are under some form of a possible accommodation. You can see here home equity declined 0.4%, now at 7.2, and mortgage also declined 0.1%, landing at 9.4%, and then automobile 8.5, up slightly 0.5%, and that's from the first observation point of March 3rd. So as we wrap up today, I want to thank you so much, for tuning in to this series, but also want to remind you of our upcoming Market Pulse webinar series. Our next series is going to be on July 23rd, 2020 at 2 p.m. And these webinar series is where you're really going to find deeper insights, that really on topics that matter to you, and more importantly, topics that help you, to manage your business a little better. The topic for this session is use of advanced analytics and high frequency data and helping businesses adapt to the next normal. And this is going to be presented by Prasanna Dior, Chief Analytics and Data Officer for Equifax, along with Scott Zoldi, Chief Analytics Officer for FICO. And as always, a reminder that we're here for you. And you can contact us and reach out to us at any time using the contact information that's on the screen. And thanks so much, and we look forward to Weekly with Walker next week.